Myself Aditya P. Tripathi, I am here to continue our discussion on the very interesting topic of disclosures in annual report of a company. This is going to be part 3 of our lecture series on disclosures in an annual report of a company. And in this part 3 of my lecture, I shall be telling you about the mandatory disclosures under LODR, that is listing obligations and disclosure requirements. And under that LODR, what are the different subheads, what are the prerequisites into the disclosures under LODR, that shall be our agenda of discussion today. Under LODR, we cover MDA, that is management discussion and analysis. We cover corporate governance report. We cover business responsibility report, which is also known as BRR. So in this part of my lecture, I shall actually be explaining you about mandatory disclosures under annual reports, mandatory disclosures under LODR. In previous 2 lectures, I told you about the broad classifications of disclosures in annual report, that is mandatory and voluntary. And under mandatory, we have already discussed about the disclosures as per the provisions of Companies Act 2013, which is the most comprehensive one. And after that, the disclosures under Companies Act 2013, we have another set of mandatory disclosures which is coming from LODR, and the third part is actually disclosures under IND AS, which is actually the name of IFRS in Indian scenario. So in this part 3 of my lecture series, I'll be telling you about the disclosure requirements under LODR. Before I proceed and tell you about what are the requirements under LODR, it is very important for us to know what is LODR, what is listing obligation and disclosure requirement, and what kind of disclosure we are supposed to provide into it, and who is the target audience. So the moment you understand, the moment you come to know what exactly is the motive behind this LODR disclosures, you will actually be clear about the type of disclosures we are supposed to offer. This is basically a mandatory disclosure from the side of regulator. Now the regulator is which entity? For companies, the regulator is SEBI, Securities and Exchange Board of India. So apart from disclosures under the provisions of Companies Act 2013, we have certain prerequisites, certain requirements, certain compliances from the side of regulator, that is Securities and Exchange Board of India, whenever we talk about the Indian corporate setup. SEBI being the regulator of the capital market, it also puts certain regulations in front of us that we have to comply with, and here LODR is one of those requirements. So the moment you are going to any of the stock exchanges, you are approaching any of the stock exchanges for listing of your shares and debentures, because you are willing to trade in the market. If you are going for getting your stocks listed in the stock exchange, any stock exchange of India, then obviously you will have to go through the provisions under LODR. That what are those provisions under listing obligations and disclosure requirements. So for your information, I am telling you here that SEBI, the latest regulation of LODR is of 2015. In 2015, SEBI came up with the LODR requirement of 2015, which is amended from time to time. And the latest amendment is itself is in 2021, where they have notified the amendments. So LODR belongs to 2015, but amendments can be done number of times by regulator as and when it is needed. And you can actually understand the magnitude or the intensity of provision, that there are certain changes, certain occurrences, certain events which as a company we are supposed to report to the stock exchange within 24 hours of the occurrence. So suppose if it has happened, we are not even given the time of a week or say a month or say a quarter. We are given a time of 24 hours only, that the moment as and when it occurs, you are supposed to intimate if you feel that this information is material to us. If this information is material for the stock exchange, so it is basically addressed to the stock exchange, where we are applying for the listing agreement, where we are signing that agreement with the stock exchange, because we wish that our shares or debentures must be listed in that particular stock exchange. So disclosure under listing agreement, if you talk about, these disclosures are basically the requirements applicable only to listed companies. Why it is applicable for only listed companies? Because unless you go to the stock exchange for the listing requirement, you will not be asked for such kind of disclosures. So it is actually emanating from your need to get your stocks listed, and once you are going for getting your stocks listed in the stock exchange will ask you to comply with this LODR provisions. So whenever you are signing an agreement of listing with the stock exchange, you have to actually comply with, or you have to actually abide by the provisions of listing obligations and disclosure requirements. So it is applicable to only the listed company or the companies which are going in the process of getting itself listed. Now the question comes, what it includes, what are the sub parts of this LODR, that is listing obligation and disclosure requirement. The first and the foremost part is MDA, that is management discussion and analysis. So whatever management thinks about the overview or the outlook of the company, they have to actually put in front of the shareholders or the stock exchange, because it is coming to the shareholders or the stakeholders in the form of having the mention of it in the annual report of the company. Otherwise it is initially addressed to the stock exchange. So you are supposed to provide MDA. I shall be telling you in detail what is there into MDA, what are the motives behind writing the MDA, what are those points which directors are supposed to keep in mind while drafting the entire MDA, that is management discussion and analysis. Then comes corporate governance report. The company is also supposed to submit a corporate governance report about the situation of governance, about the position of governance in your company to the stock exchange, that this is the modus operandi which we have resorted to, the kind of internal control system you have. This also I shall be telling you in detail what exactly is there into it. And lastly, they have to submit the business responsibility report. So the moment you find the presence of these three reports, that is MDA, corporate governance report and business responsibility report, you must be clear that it is emanating from the LODR requirements, that is listing obligation and disclosure requirement. Because unless we are clear about it, that from where it is emanating and what is the source of this kind of disclosure, we may have some confusions that why are we supposed to provide this much of information. Because at times my learners are asking me, sir, why annual report is so voluminous? What is the need of submitting the annual report of 700 page, 400 page, 300 page? Can't it be a one page format? Answer is no, it can't be, because we have to actually take care of, or we have to abide by, we have to comply with different regulations, and those regulations are required also. You cannot deny to the benefit of these regulations, though the benefits are so much that you cannot you cannot carry on your business operations without them. Because some of the regulations they are for your financial matters, some of them they are for the social obligations, some of them are for the legal obligations. So all those obligations we are supposed to comply with, and that is why LODR is also one of the important disclosure in the annual report of a company. So it is nothing but a replication of, or you can say a copy of whatever you have forwarded to stock exchange. A copy of the same is being incorporated into the annual report of a company. So company is not supposed to prepare it separately for the purpose of annual report only. It is something which has already been submitted to the stock exchange, and the copy of it is being provided to the person who is compiling the annual report, and then the annual report becomes very voluminous or comprehensive for you. So let us start with the first disclosure under LODR, which is very important, that is called MDA. If you remember my first lecture on disclosures in the annual report of a company, I promised you that I'll tell you how to read the annual report within minimum possible time, how to get best out of the annual report with the least of efforts, with the minimum of time. And this is the point where I wanted to explain that LODR requirement, Companies Act 2013 regulations and Ind AS disclosures, if you cover up these three things, if you consider these three types of disclosures, then obviously there is nothing much left into the annual report for you to know and study. Because it is actually it provides you the comprehensive outlook about the company, about their performance, about their social obligations, about their the legal obligations. Minus this, whatever is written is actually a detail, and those are voluntary disclosures for which there is no such format which you are supposed to follow. So let us start with the management discussion and analysis. What is there into this MDA? Now the first question which comes to your mind is, sir, MDA is written into the annual report, and under which clause of LODR it is actually covered. So the answer to that is clause 34. Clause 34 of LODR, it requires that a management discussion and analysis report must form part of the annual report which is being provided to the shareholders. So this is actually the clause 34 of LODR, which is mandating to the company that you are supposed to include MDA into your report, and it must be addressed to the shareholders. Now when you will come to know what is there into MDA, you will understand that why it has been mandated for a company to provide MDA, that is management discussion and analysis. It include, let us come to the composition of MDA. So within LODR requirement, the first report is MDA, and within MDA, what are the ingredients or what are the what is the composition of your MDA, that I am going to explain here. So MDA first of all begins with the address to the shareholders. Directors are addressing to the shareholders, because directors on behalf of all shareholders, they are actually addressing to the shareholders. On behalf of the entire board, they are addressing, they are telling you about the industry structure and developments. Suppose if we take example of steel industry, take any company and go through the annual report of any company. I am not naming any company here, just to avoid any kind of doubt that I have certain level of inclination towards a particular company. You take any company, simply go to the Google and download the annual report of that specific company, or you can visit to the website of the company and download the latest report, and simply try to find out the MDA, management discussion and analysis. The first para of MDA will actually be the address of the board chairman, director towards the shareholders, and there they start their discussion with the industry structure and developments, that what is the structure of this industry in which this company is operating, and what are the recent developments, either in favor of the company or against the company, whether the wind is in favor of the company, or it is not in favor of that industry. So the first para tells you about the macro level developments, macro level outlook of the company, that this is the industry structure in which we are operating and these are the recent developments. So whatever positive or negative, they are actually providing you, and they may cite certain government data also, they may cite certain global data also, that this is where we are standing, our company vis-a-vis other competitors in India and also abroad. They actually provide you the industry structure and recent developments. After that, they tell you about, it is a kind of SWOT analysis, strength, weaknesses, opportunities and threats. So they tell you about, given this industrial structure and developments, what are the opportunities which we are having. So with the given strength of our company, in this given macro structure or the macroeconomic scenario, what are the opportunities which company is having, and what if the company is going to avail these opportunities, what kind of threats are there, what are the challenges in front of company when it comes to take care of these objectives, these goals which company has set for itself. So it is a kind of SWOT analysis which is being presented by the management before the shareholders. So they tell you about the strengths, weaknesses, opportunities and threats. Here I have mentioned only opportunities and threats. The reason being, I want to indicate that industry structure and developments, they are telling you about the strength and the weaknesses, that whatever is happening in the economy, in what way, in what manner it is affecting our company, and within that scenario, within that in the backdrop of these developments, what opportunities we have and what are the threats if we are going to take care of, we are going to complete our goals or we are going to achieve our target. So in this MDA, after providing the SWOT analysis, they are supposed to provide you segment-wise or product-wise performance. So suppose if my company is dealing with different segments, suppose if we take example of any FMCG company, it has different segments. So either you will provide the segment-wise reporting or you shall provide product-wise performance, that this is what company has fared, this is the way company has performed in the recent year, in this current year, in relation to previous year performances. A comparative analysis is provided by the company, segment wise or product wise performance. Remember, this is also part and parcel of your MDA. So MDA doesn't mean that management is only providing you a discussion. Discussion is based on different segments. So it is a segment-wise or product-wise performance analysis also. So when I'm telling you about, as a company, I'm addressing to my shareholders. So I'm telling you everything, that given the scenario, what are the strengths, what are our strengths, what is the weaknesses and opportunities and threats. After that, we have to report segment-wise or product-wise performance. Then outlook of risk and concerns. What are the areas where it may be risky for us to operate, so that shareholder must be aware that your money is going to be invested in these projects, these forthcoming projects, where the opportunity is there to earn, to generate greater amount of ROI, to ensure greater amount of ROE. But what about the outlook of risk and concerns? So areas of concerns, or you can say KRAs, that is key result areas, they are also part of our MDA, that is management discussion and analysis. And once all these things are discussed, which actually tell about the future prospects of the company, which actually tells about the possibility of losses, that what are the areas, what could be the maximum loss, what could be the area of concern, everything is being explained to the shareholders. This is what is expected from the board of directors. Why it is expected from the board of directors? Because since you are investing the hard-earned money of your investors, you are not supposed to hide anything from them. You are working on behalf of them. So shareholders, who are the real owners of the company, they have nominated you to act as an executive to the company, and you are supposed to report. After that, you have to again discuss about the internal control system, that what kind of an internal control system we as a company have, and whether that internal control system is adequate or not. What if it is not adequate? As a management, as a representative of shareholders, they are supposed to intimate it to the shareholders that, see, given this internal control system, these are the loopholes, these are the areas where we are lacking, where we may lack, where this can be a point where company may suffer some severe consequences. So that is another point which should actually be explained into the MDA, that what kind of internal control system we have and whether it is adequate or not. And remember, if you cut short the story, if you try to summarize the entire component wise discussion of MDA or the segment wise discussion of MDA, you will understand that MDA and directors reports are basically a kind of report or an instrument for you to get an insider's view on the performance of the company. Because the directors, they are acting as executive to the company, they are categorized under the head of KMPs, key managerial personnel. So they are actually working on behalf of the shareholders, and they know everything about the company. So it is better to listen from the horse's mouth rather than going to the rumors and other reports. It's better that what my directors are saying. So you will actually get an insider's view on the overall performance of the company once you go through the MDA. So if you ask me, sir, what is the benefit of having MDA? What is the motive of SEBI behind making it mandatory that every company is supposed to include MDA into its report? So the answer is, MDA is basically meant for getting an insider's view on the performance of the company. So let us listen from the directors himself or themselves that what is their opinion about the performance of the company. And if they are positive, then obviously everything must be going positive. We should not completely rely on the financial position only or financial performance only. Balance sheet may give us the good position. Profit and loss account may provide us the handsome amount of profit. But what is going on inside the company, what is happening in the company, that you can sense from the report of directors. And obviously MDA is nothing but the discussion by the directors, that is management discussion and analysis. So this is the first disclosure under LODR, where directors are supposed to offer their discussion and analysis. And directors are supposed to be unbiased into this kind of discussion. If there is something wrong which is going on in the company, they are supposed to report it without any hesitation, without any inhibition or biasness. They are supposed to disclose that, see, this is what is happening in the company. If it is positive, that too should be explained. If it is negative, they should not mind writing about that. This is the right way of drafting that MDA. after MDA, another report which is of immense importance, and it is known as Corporate Governance Report. In short, we call it CGR, Corporate Governance Report. Now, the Corporate Governance Report, this is also prescribed under Clause 34. So, this listing agreement prescribes requirement under Clause 34. And this Corporate Governance Report basically, deals with the matters which are related to the composition of Board of Directors, functioning of various committees of the Board of Directors. For instance, you can take example of Audit Committee, the Remuneration Committee, or any other committee which have been formed. So, this Corporate Governance Report is going to tell us about, the way the company is being governed, the way the governance is being executed in the company. That is something which we get from the Corporate Governance Report. So here we get to know about everything, every detail about the composition of board. Who are the directors? What is the composition of directors? Who are independent directors? Who is the women director? What is the remuneration which is being paid to them? What is their tenure? Who has retired? Who has joined? What is the remuneration committee? What is the audit committee? Whether the managerial remuneration has been paid as per the provisions of Companies Act 2013 or not, and everything. Every detail about the composition and the direction of your board, which is actually taking care of your performance of the execution. The company is also supposed to, after providing all these details, company is also supposed to obtain a certificate regarding compliance with the corporate governance requirements. And there is a question: who is going to issue this certificate? Who will actually issue a certificate? Normally a company secretary, practicing company secretary is supposed to issue, but you can get it from a chartered accountant, or a company secretary is going to issue you a certificate stating that the corporate governance requirements are complied with, whatever provisions are laid down for the company has complied with those provisions. If not, they are supposed to mention that also into their certificate. So certificate cannot be issued by a chartered accountant or a company secretary unless company is complying with the provisions laid down under LODR, under the SEBI regulations. If there is some specific regulation for the company, that also need to be reported. Now the question comes again, what is the composition of corporate governance report? Just like we had a discussion on MDA, that what are the different subheads of MDA, likewise we have different heads for corporate governance report as well. So it starts with the brief statement on company's philosophy on code of governance. Obviously every company is supposed to have its own code of governance, and some companies, they are having their own, apart from SEBI regulations and legal provisions, they have their own set of rules for governance. If that is there, they also give a mention to that over and above these provisions of SEBI guidelines, or the Companies Act 2013 provisions, or LODR, we have our own set of regulations for governance. So first of all, the company is supposed to provide a brief statement on company's philosophy on code of governance, that this is our philosophy on code of governance, this is the way we are managing. So here you find a reflection of what kind of what is the level of seriousness of the company towards the code of governance, whether the company is particular about the code of governance or not. Then after this brief statement on company's philosophy, the second important point which they are supposed to disclose is details of the board of directors and committees thereof. So you have to provide all the details of your board of directors, their name, their designation, what kind of responsibility they are shouldered with, and what is even their DIN number, directors identification number, that they are also supposed to provide that, and committees thereof. If there is some committee which is comprising of some members of board of directors, that also need to be explained, that also need to be detailed in the annual report. Apart from this, specific disclosures, like suppose if you have any materially significant related party transactions, that also need to be explained here. So if you as a director feel that some disclosures on materially significant RPs, that is related party transactions, which may have potential conflict with the interest of the company at large, that they are supposed to disclose into their corporate governance report. Now if there is some related party transaction, It is always there that you have to disclose. Even Ind AS prescribes. I'll be telling you in due course of our discussion that what are the concerned Ind AS which talks about the related party transactions. So this is a point where you are supposed to explain, where you are supposed to detail or disclose it to the stock exchange, that these are the transactions which may which may in future have some conflict with the interest of companies at large. And always remember, the interest of company must supersede the interest of any other employee or execution or any execution KMP, or you can say key managerial personnel. So the interest of company should always be given the top priority. This is the main motive or key motive behind corporate governance, and in their report that must be reflected. Apart from this, they have to provide the details of non-compliance by the company. This is the point which is very important, and most of the analysts, they are interested into this segment of corporate governance report, that compliance, we know you must have obtained certificate, you must have complied with all the provisions of LODR, Companies Act, SEBI regulations, but what about non-compliance? Is there any non-compliance by the company? If it is there, it need to be reported. Is there any penalty which has been imposed on the company? If it is there, it need to be disclosed. Is there any restriction on the company which is known as strictures? It is known as strictures. Strictures are nothing but the restrictions on the company. If there is any restriction imposed on the company by stock exchange or SEBI or any statutory authority, it can be any agency, any regulatory body, on any matter related to capital markets during the last 3 years, if it is there, it need to be mentioned into the corporate governance report. So company cannot say that, see, there is no penalty by SEBI or by the registrar of companies or by the authority related to the company. Any authority, if there is any kind of restriction or penalty imposed upon the company, that need to be explained. They are also supposed to provide whistleblower policy and affirmation that no personnel has been denied access to the audit committee. If somebody is willing to have an interaction with the audit committee, they should be welcomed, and that is something which need to be explained or disclosed into this part of report, that is CGR also. Market price data, whatever is high-low during each month in last financial year, performance in comparison to broad-based indices just like BSE Sensex or CRISIL index, they have to provide high-low of every month into this report. And after this, they have to provide distribution of shareholdings, what is the outstanding GDRs or ADRs, that is global depository receipts or American depository receipts, warrants or any convertible instruments, conversion date and likely impact on equity. So whatever has happened in terms of this distribution of shareholding, that also need to be reported. So under CGR, these were the important ingredients which a company is supposed to provide. So with this, I tried to explain you what is there into the LODR requirement, and I hope you must have understood and enjoyed today's lecture of mine. I shall be covering up the remaining topics in the next lecture of mine. Thank you so much.